A very good evening to all of you. I thank Dun & Bradstreet for inviting me here. I actually told Avinash that I'd love to come for this session because we deal with the startup economy in different ways. And I thought it would be great that I could sit here and, sort of hear a few thoughts from all of you. But unfortunately, that didn't happen, more because let me blame the startups. I ended up meeting 4 brilliant startups through the day, sitting in my office. So it's, I'm just sharing this point because it's so fresh in my mind. I've just come away from about 6 hours of meeting with these 4 great startups. And I'm just quite amazed as to how we've gained the confidence to be able to go out and do a business. I don't know where this is coming from, and I'm sure all of you represent exactly that. I mean, any and all of you who have run startups, and of course, Shrikant is probably the father of startups. I mean, I know Shrikant from earlier, and I can only say that, if Shrikant runs a startup, it's probably easy for him to do. But I would say running a startup is, in this country especially, not very easy. And just to give a sense that, people who probably have done some sort of science or engineering, is it that they end up going towards the startup economy more easily? I mean, this is just a question which sort of came across my mind when I was meeting with these brilliant guys. And it's not that all of them are 25 and 26. These are people who have probably done a full innings in a particular area of work, and then they've, sort of got this spark and they've come back to India. So many of them, of course, lived abroad for some period of time, and then now they've come back. So I think there is another aspect which is probably, encouraging people, or, it's creating a spark within them, is that India is now a place to make money. So, there was this particular gentleman who talked about the fact that he's worked 20 years or 14 years in the US, and finally he felt that his idea will make more money in India. Now, I hope he's not disappointed. I hope he doesn't run back to the US and take his company there and, sort of flip, as they say. But I think somewhere we have reached that particular point where we have a domestic economy that has the ability to absorb. It has the demand which certainly exists. But more importantly, we might have a business environment that is more friendly. And I can just take a leaf out of what the lady just mentioned. I mean, she's heading Startup India. What SIDBI was asked to do in 2016 was to distribute 10,000 crores amongst the AIFs in order to support the startups. I think it was probably a great leap of faith. The minister at that point of time was Mr. Jaitley, actually, who created this scheme. It was initially in the Ministry of Finance, and then it moved to the Ministry of Commerce, and it's in DPIIT as it's called today. But what we really see in that scheme is the need to give money to people who have handled investments. So the AIF industry sort of grew on the back of this 10,000 crores. We have given funds to about 110 AIFs, of which 40% of them are first-time fund managers. There's about 18 to 20% of them are women. And in turn, we asked the AIFs that they must put twice the money, raise twice the money and put the entire money into startups. So they've done that. They've put money in about 950 startups across a variety of sectors. Probably this has helped the mood within this room itself, that startups can actually go to funds probably all the funds are with Indian investment managers, which I think is another sort of newer point, because I remember 10 years, 12 years ago when I was in SEBI, all the investment managers of the erstwhile venture capital funds would end up being foreigners. So we are probably now, we've got homeborn or maybe people who have come back to India after successful stints abroad. And these are Indians who are looking for good solutions from other Indians. And thereby, I think we have penetrated much more than a Gurgaon, Bangalore, and a Bombay. So our statistics show that we've got about 25% of the startups out of those 950, which do not belong to a Tier 1 or a Tier 2 city. Now, I thought that again is a statistic worth sharing. I myself have been to some of the smaller towns. We've had a couple of events. I mean, it's nowhere near a pitching event, but it's basically an event where we call startups who are in those smaller towns of Indore and Rajkot. And we try and get some of the AIFs who we have funded to come there and just have a conversation. The ambition and the desire to make money is palpable. And I think that's really where I go back to the point that there is a tremendous confidence today amongst Indians. Of course, you would expect that they would be at least 12th class pass, if not more. And these are not all tech startups. So you have people doing very innovative work in the services sector, in agri-processing sector. You have actually a lot of people who are in the agri-tech space. So, the tech does come in, but I think the tech is just a matter of delivery. So I think let's go back and, put our hands together for the JAM Trinity, because I think that's really what has created a lot of the tech enablement, because of which I have gone into villages and I've seen QR codes on a particular old man's shop. I mean, it's not even a shop, but he's sitting there, but he's got a QR code. Now, it's quite amazing to find that we've managed to penetrate what used to be, the sort of black hole. I mean, the famous quote of a prime minister saying that, 15 paisa or 15 rupees out of 100 rupees is all that finally goes to the person who is the beneficiary, and the remaining just leaks. So I think we've seen a lot that has happened, and the rails that were needed for this country to be able to get business to flow, I think those rails are in place. A scheme like the Fund of Funds, which was followed up by another fund called the SRI Fund, which was, I think, somewhere in 2020. Between these two funds, just 10,000 plus 10,000 crores out there in the economy for businesses to receive and grow. Now, this is an equity culture that has come about. Till now, I think the country was just looking at, debt from banks, and that's really what we all have lived with. It's about, I think, making the rails to work much faster. The payment system is there. The equity culture is in place. But probably there's one part which is still missing, is the risk-taking ability of financiers. And I would say that any startup which gets its equity, does not want to dilute more equity, is looking for debt, and the bank simply says, sorry, you don't have 3 years of, profitable balance sheet, and therefore we cannot give you money. So there enters, the whole concept of venture debt. So how is venture debt really playing itself out? And in that, let me talk about the fact that if we are looking at young businesses getting money at 20 and 30%, which is typically what an NBFC would come and give you money at 20%, that's really not viable for you as a young business. So I think what we've moved ahead to is, and this SIDBI has already done, is to be able to give money at 8 to 9%, or even if somebody is great, 7.5% in today's regime. And we're talking about a GST, a bank statement, and probably 2 years of income tax returns, which then gets put into some sort of an algorithm which gets analyzed and comes out in the manner which is easy for a lender to digest. And this we've attempted. In fact, we've put SIBIL and OPL, which is online public sector loans. So SIBIL and OPL got together and they marshaled data which they had for over 2.5 lakh applications on the OPL marketplace site. And they constructed a score based on these three elements of GST, ITR, and bank statement. And today what we've come out is called FIT, Fit Rank, which triangulates the data and provides a single score, which has been, as I said, rigorously tested. And we have used it in SIDBI for giving any loan up to 1 crore based on just this information. So there is no manual intervention whatsoever. It is just a matter of uploading these three data points. We pull the CMR score, which is the CIBIL repayment score, which typically, if you've taken a loan, then your loan would be there on the credit bureau. So between these 4 data points, we've covered probably 90% of the risk. The remaining is really a management risk, which is always going to be there. So we have to move towards a better credit delivery system. We're talking about the GST regime. 1.5 crore entities are in GST. We know their transaction data, and therefore we can analyze them and do a much better risk assessment. Now, this loan, as I just described, should be delivered in half an hour. It doesn't take more than that. At least let us look at delivering loans to maybe existing customers on the same day, to a new customer on day 2, because you need to do that obligatory visit to understand, where is that business entity, where is that factory, where is that premises. So this is really where we have to move to. We have also now taken up for the GST segment something called cash flow based invoicing. Now, invoice-based financing, which is nothing but based on your cash flow of GST transactions matched with the cash flow in your bank. We are then saying that just on that particular invoice, because you have a transaction history, we'll be able to give you a loan instantly on that particular invoice. Now, this is happening. It's not going to be probably a single invoice, but maybe a collection of a few invoices. So we are therefore disrupting the system by saying that the cash credit system, which exists in this country and which is like, the dream for any young company to be able to get a cash credit system, cash credit from their bank, we no longer are looking for a cash credit. We can now move towards invoice financing. This has happened through TREDS. I don't know whether any of you are aware of how the TRED system works, but it's a great design, but it still depends upon the buyer to come to TREDS, and only then can the seller, who is typically the smaller entity, will get his money through that tripartite arrangement, which is between the financier, the buyer, and the seller. So it is a great step forward, but it is still not enough for a young company, which is the seller, to be able to simply get in finance based on the invoice. So, these are the experiments that are happening. This is what we are pushing forward very hard. But let me also just mention that The other thing which is happening is really the data sets that are getting created. So we have 1.5 GST registrants. We have all of them on what is known as the Udyam platform for Udyam registration, which is today the reason why a bank will give a loan is because priority sector is now defined by the Udyam registration. Now, what we have done, and this is now kicking off, we've brought in 35 lakh non-GST entities based on their KYC information held with banks or with the MFI system. And this entire number is running into 6 or 7 crores. So this is really the large India we are talking about, the industrious India which is outside of GST, but which is producing great value across the country. They are getting loans at 30% from the MFI system, at 100% if they are in the unregulated market. Now, this is the problem we have to solve for. We need to make sure that everyone who runs a business in this country has the ability to get bank finance at an affordable rate. I'm not saying everyone will get it at 8 or 9%. This could be 15%, but at least it is better than what is happening today. There is a need for working capital in every business. Today, working capital for an undiscovered non-GST entity outside the bank system is, you can take a guess. So anecdotally, 1,000 rupees worth of goods is taken in the morning, sold in the evening, and 1,100 rupees is paid back. So that's the rate of interest that is charged. So this is really the large issue which I think if we see so many happy faces today in this room, I think there's many more faces that need to be turned as even more happy as we move ahead. And I think this is what, as policymakers, policymakers and practitioners and all of you in this room, this is how we have to go ahead. There are many experiments which have already been done. There are excellent examples of databases being created for the underserved. But it has to finally translate into money coming to them at affordable rates, and therefore the income effect in their lives have to be seen. And there's one last point which I would sort of leave with all of you is that it's just not all about loans. It's not also all about equity. It's about an entire bouquet of financial services. And therefore, the whole concept of insurance needs to be driven in much, much more deep. Today, we have a penetration of about 5 or 6% of insurance within the country. All of you and I are obviously in that. Now, look at a small business. Their biggest problem is when they suddenly need emergency money, they will end up using whatever money they have, be it a loan or be it whatever, and they will use that. If they don't have money, they'll go to the money lender. And this is really where, as a bank, if I have given a loan, I know that the loan is not going to come back because there's a health emergency and the money is gone. Now we need to build this whole concept of microinsurance. It's already there. It's being tested across many geographies, but it has to now become an everyday affair. It has to be that anyone who gives a loan through the MFI system or the bank system or the NBFC system, we need to make sure that there is a health insurance that goes along with it. The program of the Government of India for the entire sort of health insurance coverage is something which is today only for that very low segment, which is known as the BPL segment. But I think there's a very large population which is above BPL and below GST. And therefore, through all these measures, we really are looking at formalizing the economy that much more. So, I just felt that, talking about the whole startup economy, it's great. We've got all the schemes going. We've got the AIFs. We've got domestic money now flowing in. We've got a set of incubation centers which have now rapidly taken off. But let's not forget that there is still a very large part of Bharat which is not really touched by all the sort of wonderful things that have happened, except, as I said, the great, innovation and the ability to use the Aadhaar and the mobile and the JAM Trinity to be able to at least deliver the payment system to their doorstep. So once that is done, I think it's really a matter of us, getting the other things in place so that many more lives become more fruitful. So I thank you so much for hearing me out. And once again, it's great that DNB has put this program together to applaud the work of the startups. And I can only say that very soon we'll be, looking at the rest of the world coming here to invest in our companies, and that will be a great day. Thank you so much.